All right. Good morning, everybody. My name is John Cambier, and I'm going to be the moderator for this panel on angel and early stage investing here in the late 2020 year that it is. I'm joined by two fellow investor panelists here with me that I'll introduce briefly and let them each say just a bit more about themselves. The first is Tim McLaughlin, who is a partner with Co-Founders Capital here in the Triangle as well. And then we have Robbie Hardy, who is the founder and chair of Excel Ventures, a new group that's getting off the ground now that I'm excited for her to be able to share a little bit about. Robbie, you want to just go first and say a little bit more about you and Excel?
Yes. Hi. Thanks, John. Yes, my name is Robbie Hardy. I'm a serial entrepreneur years ago, but now I'm the founder and chair of Excel Ventures, which is the first and only women by women angel group in North Carolina. So we're very excited about it. I mean, we got started just about a year ago. So sometimes people say, well, what was this time like for you last year? Well, we were brand new. So it was it's different now for everybody. The goal of Excel is to build wealth in women, both those launching new businesses as well as those investing in them. I mean, we all believe, all the founders of Excel believe a focus on female entrepreneurs, female-led companies, and female investors is long overdue. Our goal is to invest in the ideas, products, and services of women and build a growing and educated community of female investors. And of course, build the wealth of women. So we started out as a network, and we are in the process of moving to a fund. We're doing the sort of crawl, walk, run approach, because one of the pieces of this that's really important is to increase the number of women angel investors in North Carolina and all over the world. We can complain that women only get 2.5% of the money, but we need to look in the mirror and figure out that some of that we need to rest at our own feet.
Great. Thank you. Tim, tell us a little bit about you and Co-Founders.
Sure. Thanks, John. So I'm a partner at Co-Founders Capital. We are a venture capital fund focused on B2B software companies, primarily in North Carolina, although we have made investments in the surrounding states. We invest in seed stage. So we're a rare venture fund that is saying we'll invest pre-revenue or just at revenue. We're investing out of our second fund right now, which is a $31 million fund. We've been around since 2015. We've made 27 investments across 2 portfolios. Have been having an interesting time this year managing our portfolio companies through this pandemic, which I'm sure we'll get into. Our proud co-investors in a couple deals with you at Idea Fund, and hopefully future co-investors with Robbie at Excel. So good to be here.
Thank you. And just a bit about myself and Idea Fund partners. So we are also a Triangle-based seed and early stage venture fund. The other founding partner, Lister Delgado, and I have been investing together since 2003 and doing it as Idea Fund partners since 2007. We are now investing out of our third fund and are about halfway through it. We've invested in 11 companies. We have a target of 20, and we are most often writing our first checks at the post-seed pre-A stage, leading or co-leading kind of $1 to $3 million rounds with a $500,000 to $1 million check, and then having some capital in reserve. We will invest anywhere in the United States, but we focus our efforts on the cities outside of the hypermarkets of Northern California, New York, and Boston. Have done a lot of investing around the Southeast, and the 4 sectors that we focus on are SaaS, tech-enabled services, home tech and property tech, and Internet of Things. So thank you both for joining me on the panel. One of the things that I wanted to kick off with, just so people would have an idea, is what sectors, as you're looking at new deals and looking for new deals, are kind of coming into favor or out of favor for you? And I'll let you start on that one, Tim.
Yeah, sure. I think it's a great question. We've dug in and done some deep research on, are there any industry specific that we want to target? What really we're seeing as kind of trends is, where is there going to be a backup or some sort of buildup through COVID, where workflow automation, operational efficiency coming out of COVID is going to be very important. So we look at, how do you do more with less if you've had to lay people off, or how do you increase your utilization, if you have limited capacity in your business. I'll give you an example. Selling into healthcare IT, several of our companies are healthcare IT companies selling into hospital systems. Well, certain things in hospitals have been delayed. We have a company called Relay One that we invested in, which helps communication and collaboration around surgeries. All elective surgeries have been postponed, but they're not going away.
Right.
So those hospital systems are going to have to figure out, how do they go from 35% utilization in the ORs to 70, 80%. And so that's where operational efficiency is going to come in and be key. So we're trying to avoid this whole COVID noise that might come with some companies, and think on the back end, what value props are still going to resonate, and how are these folks going to be able to do more with less. So that's kind of how we're focused and thinking about it, rather than certain specific industries.
Yeah, no, that makes sense. How about you, Robbie, as you're getting Excel up and going? What things are you maybe not so interested or more interested at this, in November of 2020?
Right. I mean, well, the obvious ones like travel and spas and anything that requires people to be physically close as the requirement. The vaccine is coming soon. Defining soon is a relative thing, but we will be socially distanced for a long time to come, we think. So what we look for, and it's similar to Tim, but he's very software focused. Obviously, he's 100% software focused, and we're women focused. So we're looking at, how do people leverage technology that can bring things more efficiently to the customer, both for products and for services, taking advantage of the challenge of the need for social distance, but, just trying to keep it real. But how can we deliver things that we might not otherwise have delivered? You might have gone out and gotten, how can we bring it to you in a much more efficient manner? So,
Yeah.
we are not, we're industry agnostic, but we really do look at that. And of course, it's not a sector, but we also, we look at the agility of the entrepreneur, knowing that, this was COVID for 2020. What could be happening in 2021 or 22, and how, ready could this entrepreneur be for that type of thing?
Yeah, no, that makes a lot of sense. I think very similar to what you two have both said. As we're looking at things that come across our transom, we're very, very much interested in what we're calling the automation of everything. So again, as you were saying, Tim, things that are increasing the operational efficiency or operational reach of organizations through automation of tasks that otherwise are more intensively human defined. And we're seeing a bunch of interesting stuff there, thankfully. So switching gears a little bit, 2020 has been an interesting year for a number of reasons. COVID, obviously, the Black Lives Matter movement, I think, is another one that's really been having an impact on the business community in a number of what look to be positive ways. And I was wondering, with both of your groups and yourselves, are you thinking about founders and demographics differently this time than maybe you were last year? I'm going to let you go first, Robbie, because I know you're certainly thinking about founder demographics, and not necessarily differently. You were perhaps a little ahead of the curve, thankfully, but tell us a little bit more about that.
Yeah, I mean, we obviously are looking at the underserved, which is women, but I think we're sort of late to the party, but thank you for saying we're early to the party. I feel like we should have been able to do this years ago, but we're excited to be doing it now. But we are also now we were cognizant about diversity in our members, in our board, in everything that we do. So we had already started that way as we had this, we already had the women focus, and we're even more so as we, we're not doing quotas or anything like that, but we're reaching out to places that we might not have thought of before, and going to events where there are minority founders being pitched, et cetera, so that we expand our network so that they know about us and we know about them. So we really care a lot about diversity, obviously. And then additionally, we're expanding our investors and our founders beyond North Carolina, because this is it's a North Carolina problem, but it's a worldwide problem. So, we're looking to see what other people are doing and finding other places, to invest and have investors. But of course, North Carolina is our priority.
So Tim, how about you? I mean, bluntly stated, co-founders looks a lot like Idea Fund partners in that it's, a bunch of white dudes. And, and so, I know just from conversations with you that co-founders like Idea Fund has been trying to be a little more thoughtful and introspective about this topic. But why don't you tell us a little bit about how you all have been thinking about it and approaching it?
Well, yeah, certainly. It's something that we've been thinking about on how to approach pre-2020 and everything that's come along with that. But like many other things, 2020 has accelerated a lot of trends. It's accelerated a lot of things that people wanted to get to, but now know they need to get to, and maybe are able to do better now. So what we look at co-founders is, how do we change the landscape of the investment landscape, underrepresented founders with velocity. And so what I mean by that is, Co-Founders Capital, we've hired one full-time person in 5 years. And so, and it was a white male that we hired. But that's not, hiring one person every 5 years is tough to make rapid change there.
Yeah, it doesn't really make a dent in the universe, so to speak.
Exactly. So how can we, through our investments, through our networking, how can we make more rapid changes that are going to be more impactful down the line? And we've set up, pretty easy initiatives, like with our intern hiring process, creating budget in our investments, pre-investments for our portfolio companies to be able to enact DEI initiatives within their companies, which will also help those companies build a culture, which is even more difficult to define now than it was when everybody was working out of the same office and in the same building. And so and then obviously other things like how do we network differently for access to deal flow from underrepresented communities or founders? How do we make sure that in our board recruiting process that we make sure finalists for board candidates on our companies, are minority candidates? And so we're implementing a lot of those things, but I do think 2020 has certainly accelerated those trends in a good way for us.
Yeah, no, I think you raise a really good point, which I don't think gets enough coverage in, I don't want to say the press, because the press isn't really covering it, right? It's just the chatter, so to speak, between venture funds as much as anything. But I think the fact that you all are really trying to look at your portfolio and how you can encourage them to be thinking about this as much or more than just yourselves as a firm, right? Because as you said, especially with small firms like ours, we aren't necessarily going to make the impact directly through our hiring or whatever. And where we can make the impact, or where it's amplified, is through the actions of our portfolio companies. And I know, just being perfectly honest, if we think about our own portfolio, it's a very small percentage, quite frankly, that early on are even thinking about D&I. Historically, they're just, they're running 1,000 miles an hour, and they're just thinking about, hiring the next person to make the next sale or write the next few lines of codes. And so you really do need to encourage them to kind of step back and go up a level and be a little more strategic and thoughtful about it and try and put those things in place earlier as opposed to later. So I think that's, yeah, that's important. And then, as you also said, one of the things that we're doing is we're trying to broaden our network, because, when we go out, most of our quality deals, as I'm sure it is with you, come through our network, and they come through referrals. And the reality is our network, for the most part, looks like us. And perhaps not surprisingly, most of the teams then that come to us through that network look like us as well. And so we're being much more proactive in trying to identify and reach out to the firms that have a focus on underserved founders. So, as Robbie said, so we can know what they do and they can know what we do. And then one of the other kind of small things that I'm doing, for instance, is just with LinkedIn. Typically, I don't accept connections from people that I haven't met, or don't have a lot of mutual connections with me. But for minority founders, I'm being much more accepting of connections, than I would be otherwise, because I think hopefully one of the ways I can be of help, whether I'm going to invest in somebody or not, is hopefully I can help broaden their network and make connections to other people that might invest in them or might be advisors with them, or could help them in some way, or another. So, no, that's good to know. Robbie, how would you characterize how it's been going in terms of being able to, raise the amount of money you were hoping for? And it's always hard. Tim and I both know this, it's never easy to raise a fund. So I'm curious how you'd characterize the response you've been getting.
Well, yeah, so we we are 17 days in to raising, so we're we're newbies, and the good news is we already have the network of women investors who probably 80% of them are signed up for the new fund, so that's helpful.
That's great.
And I have, I'm old, and so I've been around this area a long time, so I'm reaching back out to people that I haven't connected with in a long time. And so there's been a lot of interest. And as you guys know, interest to writing a check are two different things. But one of the important pieces, which is different than you guys, because you're raising big funds, we're very small. We are, it's a minimum of $10,000 to be an investor in Excel, because we in turn invest through debt of various forms in with the founders. So it's not, we're not talking big money, not that $10,000 isn't a lot of money, but we're trying to make it very approachable for
Right.
people to be able to invest. And so, we're out there, and because we have this network of women investors, so we sort of have a bigger army than you guys have, when you're out there raising a fund. I'm not saying it's easy, and we're not there yet, but we're getting there. And I think if things go the way they do, but who knows what could happen tomorrow, that we'll be at our minimum, so that we can launch the fund in January.
Oh, great. Yeah. So Tim, I'm curious, and this is directed towards you more, since you all are up and investing in activists. How has COVID impacted kind of what you're investing in or how you're investing?
Yeah, well, I think so. So it started with that one Monday morning. I think everybody kind of remembers that Monday morning where COVID was real. This is happening. How do we prepare as quickly as possible for this? And we did an exercise with our portfolio, across our portfolio, where you zero out new investments that could potentially come in that we were planning on, because getting access to outside capital is hard. And you delay sales cycles by 4 or 5 months. And the nature of what you see with high growth startups is a lot of companies run out of money very, very quickly. They don't have access to outside capital or new revenue that's coming in. And so what that has led, one fund I talked to said they're not in the investment business anymore, they're in the preservation business. And so I think that really hit home as far as make sure every company in the portfolio has access to the capital that they need to get through something, whatever that something was for that business. Because the worst thing that you can do is have too little capital for everyone, right? You need to make sure that the companies that need the capital have a plan, that you have access to that capital for them. So what that has led us to do is we slowed down our investments a little bit over the past 7-8 months. We haven't made an investment since March, although we're still actively looking, and we'll be making investments over the next few months. We'll be writing a couple checks. I feel pretty good about that. But maybe 1 or 2 less deals in our portfolio, maybe a little more reserve capital for the companies in our portfolio. And then really just shoring up some relationships with other funds so that there's more access to, co-investments with other funds, to make sure that the companies that are established have the capital to get through this, what we're facing.
I'm curious, do you think that you will make an investment in a team in the absence of meeting them in person?
We haven't yet.
Right, not if you haven't done something since March.
Right. We have not yet, and we've actually with companies that we are interested in investing in. There are a couple companies that we're looking at that we've met 2 years ago and have just already had that relationship. So now that's not a requirement. But even new companies that we're looking at, we have to strategically schedule an in-person meeting, outdoors, and
Right.
We'll yell at each other from a distance. But I don't know. We might have to. We're certainly not ruling it out. Although, figuring out a way to meet face to face is something we want to do.
Yeah. In our case, we've certainly are wanting to see businesses that have been able to carry momentum through the COVID crisis, because that at least tells you something about either the team or the product or the market, or all three of them, with respect to the resilience and the importance of it. And as you said earlier, though, you have to be a little bit careful about trying to sort out the COVID noise, so to speak, and really understanding if the momentum that they've been carrying is solely due to COVID or in spite of COVID, so that you don't get too excited coming out the back end for something whose bright and shininess might wane a little. We actually have made an investment in a team that we were not able to meet in person. We had been talking to them since last fall, but it's a New York-based company and hadn't met them. But I think I was able to convince myself and convince my partners that we had spent enough time on Zoom and in calls, and that it made sense to go forward and do. But I remember talking to one of my co-investors who's up in the New Jersey area with them, and he was talking about how he had a all the president's men like meeting with them, in like a parking structure and coffee, and felt very surreptitious how they were having to do it. But he's like, but I got to see him in person, so it was good.
Well, that's another thing that shows the importance of your network, right? And reaching out and who you're talking to, because you knew somebody that knew them that was making that investment, and so it could give you some comfort level around that.
Yeah. We've got a couple questions here that that I think maybe we want to address, and one of them so someone entered in. They say the golden rule of business is those with the gold makes the rules. What traditional quote unquote rules of VC do you think need to change in order to level the playing field? Robbie, maybe I'll let you take that one.
So I what's the golden rule for investing today? Is I've kind of missed the question. Sorry.
Well, I think what's implied in the question is that the playing field is not level today for people seeking access from venture capitalists.
Well, I mean, I don't think the playing field has necessarily changed that much. I mean, I think I think what you look for today at least from my perspective, is, you look for the agility and the whole idea of, making things more efficient, and also the ability to manage a remote workforce. And I think we haven't quite touched on this, but I don't know if this really is into the right answer to the question, but having a remote workforce is what's happening today, and the good news and bad news about it. So, I was in software forever, and we had remote workers long before anybody else. And there is a real art to managing that and not treating them just like everybody else, because the loyalty factor and the things keeping them from hopping around. So you really have to, have the ability to stop and take stock of that and what you're going to do. So I think that helps level the playing field when you ask that question: how are you going to handle a remote workforce? And being able to, show that that's a possibility and you understand it and understand its importance, I think is part of one of the golden rules.
How about you, Tim?
Well, I'll just give two examples. I mean, the first thing is, whether it's hiring or investing, we want somebody who has done X before, right? So when we look at changing the landscape, as soon as you put out a job description which says we're looking for somebody that has venture capital experience, or we're looking for somebody that has high growth startup experience, immediately then you're back into this vicious cycle of, not changing the game, not breaking
Right.
through.
Propagating the networks that already exist.
Exactly. And I'm guilty of it. And I'm
Yeah.
sure a lot of other folks are too. So that's one thing where I think if you're going to be purposeful about change, that you can look at and see how you would change that. The other thing I would say is, it's interesting in our portfolio companies, we're always, high growth, high margins, less services, more scalable, repeatable, all of that. Well, that's all well and good until you get into delayed sales cycles and not knowing where your next buyers are coming from. And so maybe you look at companies that can have a services more steady stream of revenue coming in, something that you can just stay alive, survive, right? Some model that is there for just cash flow coming in, even if it's not your high growth, high margin kind of business. So just being flexible about looking at business plans in this kind of environment and what's going to survive.
Yeah, that's interesting. I think somewhat related to that, and it's certainly a theme of this summit, is people. Well, I don't want to overgeneralize, and I'm kind of talking my book, but it's a mistake to equate entrepreneurism with venture-backed companies. To your point, right? Venture capital is appropriate for a small segment of startup companies, and there is a whole universe of companies that can be very successful and very profitable, and many of them can grow to quite large businesses that aren't necessarily attractive to or appropriate for venture. So to say that your company as a founder isn't necessarily appropriate for our models and what we do isn't necessarily a ding on the business. And I hope that as part of what the investor and entrepreneurial community is thinking about generally is, right, how do we expand the opportunity for entrepreneurs generally? And venture has to play a role in that, and venture's got work to do in terms of expanding the tent, so to speak. But we have to also make sure that the channels and the avenues for supporting entrepreneurs that aren't necessarily trying to build venture-backed businesses are there. And as you two both know very well, the NCIDEA grant programs, for instance, are two great. The micro and the seed grants are two great channels to potentially impact both types of companies.
Right. I mean, that's, we're not looking for the unicorn in Excel. I mean, we are looking to help support. They may be follow on with you guys, but, we're trying to get them started to see, and always ask the question, why do you want other people's money? And why do you, and for a lot of founders, I think they think that, it's the, good housekeeping seal of approval that they've, that they're doing good things when they can do good things other ways also.
Yeah, I think we've only got a minute left or so, but there's one question that just came in that I wanted to put in front of both of you. So for pre-seed companies looking to raise money from angels, what should they do to make sure they have their house in order before reaching out? Pitch deck, financial models, executive summary, hire a lawyer. Who wants to take that one?
I'll take it. I mean, we start talking to companies so early, pre-product, pre-revenue, just that idea. What's important is that you set the stage and realistic expectations of what you want to get out of that meeting. So get your house in order might just be set expectations with the investor and orient them on what stage of your business that you're in, right? I'll certainly have a conversation with somebody that has an idea of where they might want to go, and we can talk through it. But that having their house in order is going to be a lot different than somebody that wants a check in the next 2 months, right? And so I think that is setting expectations and orienting the investor is the important part.
Yeah, and know understanding what your assumptions are that you're bringing this product or service or what you need, that you really are, well informed before you reach out to anybody.
Yeah, I think those are both good points. There's an old saying in venture capital that, if you want advice, come ask for money. And if you want money, come ask for advice. So I think
Very good.
Your point's well taken, Tim, that it's a matter of setting expectations with respect to what you want, what you need to have in order for your house to be considered to be in order. It's different things at different stages, and how we respond is going to be appropriately measured with that. Well, I think we've gone over time here, so I'm gonna let you two go. Thank you both for spending a half hour with us this morning. Hopefully the panel was enlightening for those that joined us. Have a great rest of your day.